Hi there, and welcome to the Stockscores Market Minutes for May 7th, 2012. This week's topic, is it time to panic? Before we get into that, a reminder you can get my free weekly newsletter at stockscores.com/newsletters.asp, the address that you see there on your screen. All right, let's get right into the action here. Stockscores spring training starting up next weekend, Saturday, May 12th in Calgary, Sunday, May 13th in Vancouver, and then the following 2 weeks later, Toronto and Montreal. You see the dates there, May 26th and 27th. For information on those programs, go to stockscores.com/learn. All right, is it time to panic? Well, at this time of the year, because of what's happened in previous years, there is a tendency for people to be worried about the big market sell-off. Certainly last year we had a sell-off, although it did not arrive until July. But we're all familiar with that saying, go away in May. And so the question now is, do we have to worry about another big market sell-off like we had last year? Well, so far, we really don't see the signs of that. And I think the fear that people feel relates more to what they've experienced in the past, because there's a tendency to relate ourselves, our emotions, to past pain. What we should do is do what the market tells us to do. And that means don't invest with a rear view mirror. Listen to what the market is saying. And right now, admittedly, there is some pessimism building, but we still don't have that strong signal that there is panic and we should run away from stocks. Here are the charts, starting us off with the S&P 500. We are building a descending triangle on the S&P 500. That is a pessimistic pattern, but until we get a breakdown through that floor price in green, we shouldn't really think that there is more significant selling on the way. In fact, today the market managed to come back to close above its open and slightly up on the S&P, and that is a sign that will probably bounce in the next few days. The Canadian market is in a downward sloping channel, but it too is at some support at the bottom of that channel, and therefore it is likely that it will bounce higher to finish out this week, although certainly if we get a breakdown through the bottom of that channel, we should be a little bit more concerned. The VIX has broken its downward trend line, and that is a sign that there is some worry coming into the market, but we haven't made it a breakdown of that, or pardon me, a break up of that downward sloping channel in a resounding way. The break on Friday of last week was certainly, it broke the trend line, but it didn't do so with a lot of enthusiasm. So it's still pretty unsure yet whether we have fear coming into the market. Treasuries have been rising lately as markets or as investors go to safety, but we're at some resistance right now on treasuries, and so we should expect a little bit of a pullback, and that may coincide with a bounce back in stocks. The US dollar has been rising over the last week, but it is now at resistance at the downward trend line, so expect that it will get stuck. That should lead to the US dollar going lower, which would be supportive of stocks and commodities. Gold is in a pessimistic pattern in the very short term and right at the long-term upward trend line, so it's at a real critical point here. I'm starting to sense that maybe gold is going to break down through support as people realize that stocks are a better place to be than gold, and certainly comments from Warren Buffett of late have indicated that gold is one of those non-producing assets, and he believes that it is something better left alone. Oil has had a pretty sharp sell-off over the last few days as tensions with Iran have cooled, and today we saw the market open very weak and then come back to close near its high. That sort of coincides with perhaps weakness in the US dollar in the next few days, and I think that oil will bounce back from somewhat oversold levels, but I don't think that oil is a bullish market by any means, and we should probably expect that after a short bounce it will resume its downward trend. So I'm neutral on US stocks, but with some caution. That is a pessimistic pattern that is building, and we want to watch for a breakdown through support. Canadian stocks, I am bearish, but they are due for a bounce from oversold conditions, and that would coincide with a little bit of a drop in the US dollar, helping the Canadian stock market. Gold is neutral, but it really deserves caution because it is shaping up on that pessimistic pattern as it tests the long-term upward trend. And oil is bearish, but due for a bounce back. Don't be surprised if we get a little bounce higher in oil. The US dollar is hitting resistance, and I think that's the critical thing right here. It should fall back, which will help stocks and commodities. Oil is oversold and due for a bounce, but not good longer term. Stocks appear weak longer term, but don't be surprised if we get a little bit of a bounce back in the short term. Well, that has been the Stockscores Market Minutes. Have a great week in the market and trade well.